Good morning and welcome, everybody. It is Tuesday, the 2nd of December. This is the Morning Blast with myself, Ryan, and Michael. As usual, a very candid breakdown of what happened yesterday and a little preview of what's going to happen today. As a reminder, this is all recorded live, so apologies for any expletives and any trigger words that may be associated with the podcast. Nothing we say on said podcast is trading or investment advice. Nothing we say is an endorsement unless we make it very, very clear. You can trust us. That's why you come here. Mr. Michael Brown, how are you?
Well, a very good morning to you, Ryan. Good morning, everyone. Happy Tuesday. I have good news.
You slept better last night.
No, even better than that. Frequent and regular listeners to Morning Blast will recall the saga that I had last time I had to interview someone and I was unable to print their CV off. Well, good news. First attempt this morning. I'm ready to go.
Oh, and
logical genius, me, mate.
Who is the lucky person? Actually, better not name names.
I'm not a complete mug. Come on.
I nearly said someone's name that we both know, maybe a lot of people on the show might know, and then I thought better of it because I don't want to get into a bitch fight with someone. But anyway,
Can you just WhatsApp me who that was?
Yeah, I can confirm. All right, moving on. I can confirm it's not me, at least.
No. There's many reasons that preclude me from hiring you.
Because you couldn't afford me. That's the reason.
Oh, yeah. Cool.
Yeah, let's go with that one. Let's go with that one and move swiftly on. Anyway, apart from that, you good, my friend? You good on this?
I am, yeah. Not too bad at all, mate. Not too
good.
Bad at all.
That pleases me. Let's crack on. Let's crack on with an update of what's going on in markets, or what went on in markets yesterday, and what levels to look out for today, courtesy of our good friend Clive Lambert in Futures Techs. If I can find the analysis that he sent me over, I seem to have turned off my monitor.
Just talk among yourselves, ladies and gents. Make a few jokes. Not one about Ryan and his coat.
What's Flippin' got? No. Moving on. But anyway, the DAX yesterday bounced off its, guess what? Marubuzu support at 23,458 yesterday. See, they do really work. Because, I used to only like moving averages, but I'm being sucked in by Clive Lambert sucking off Marubuzu. It's got in it early today, obviously getting the Marubuzu that way, which might clear the way for bulls. FTSE futures posted another doji, third in a row now. Just kind of sums up that the market, it might be ranging a little bit, but it's really not making any directional moves. The S&P 500 was offered, but nothing trend changing, and we still expect to see a retest of the late October all-time high at 69.53 and 75 cents. That's obviously the future, not the cash. Bunds, they sold off hard yesterday, which we've been expecting based on repeated failures at or shy of the resistance around 129.10 to 26 lately. Clive has been calling for this, so well done, Clive. Although, as he said when I met him the other day, it's never really good to pat yourself on the back. It's always best just to make, raise attention when you do get it wrong, because we all do.
Only as good as your last trade, as they say.
Well, exactly. And at the moment, I can't pick my nose, let alone a winner. Downside targets for the Bund now are 127.88 and 127.55 to 62. Eurodollar, obviously currency not stirs, retested resistance at 1.1640 as sellers responded. Cable also found sellers on a rally that got to 132.75, just shy of resistance at 1.3284. Gold, the yellow metal, I'm obliged to say that, by the way, posted a doji yesterday, but we stick with the bulls. Silver, as in bulls, as in bull market, not bulls as in your testes. Silver made a new all-time high with 59.435, where we found some opposite trade, but only some. Again, Clive not fighting that one, continues to be earing on the bullish side. Platinum posted a shooting star, so that's a worry for bulls. LME copper, London copper, made a new all-time high as well, but ended up posting a doji. Brent and WTI, the two oil benchmarks, didn't improve on their overnight highs yesterday, so we're still sided with the bears on those two until we can break those highs. European gas benchmark, TTF, that gapped lower and didn't retake the gap, so gap and go, so it's still bearish, and another one not to be batting against. Ditto MBP, which is the UK's gas benchmark. Apparently, Clive's informed me that I can say black gold when referring to oil, but don't tell me what to do, Clive. EUA carbon, so EU carbon markets put in a splash of red on the chart, but nothing trend changing. And we're still thinking it can head back to 84 spot 55, which is or was the year to date high set in February and a big Fibonacci level to boot. Soybeans, finally, they fell shy of their Marabou's resistance at 1,143. Wheat is eyeing support at 531.6. And as my knowledge from the wheat markets and ags in general from our very dear friend Andy Setzer, wheat is definitely the ginger stepchild of the agricultural market complex because it gets beaten and very little love for it. Just in this grand scheme of things. Below here, I was in 531.6. A move back to 508.5 is suggested. And obviously, again, these are all front month futures that we're talking about. But thank you very much, Clive, and futures text for that. Michael, what have you got for me?
Good stuff. Thank you, Ryan. Thank you, Clive. As always, a bit of a wobble in markets yesterday. The S&P and Nasdaq down by about 0.5% apiece. As always, there was plenty of hyperbole around that move lower, but I would say that it came after 5 straight daily gains for the S&P, which was a run that we haven't actually seen since all the way back in mid-September. So more of a pause for breath in the uptrend than anything else in my book. Although it must be said that cryptos did, to coin a technical term, shit the bed throughout the entire day, which did worry a few people out there. Anyway, in terms of catalysts yesterday, we did have a few bits and bobs in terms of economic data. The main one was the ISM manufacturing PMI out of the States. That came in a little bit below expectations and actually surprisingly declining from the prior 48.7 to print 48.2 in November. The details of the report were a little bit downbeat as well. Prices paid accelerating to 58.5, new orders and employment both falling compared to the prior month as well. Of course, potentially a little bit more weight needs to be placed on the ISM data this time out than usual, given that we will not be getting anything other than this and the ADP data on Wednesday before the next FOMC decision, which is, of course, next Wednesday. So potentially just leaning in favour of the Doves, who are likely to vote in favour of a 25 basis point cut at that meeting next week. In terms of other bits and bobs, it wouldn't be the Morning Blast at the moment if we didn't mention the UK. We heard from the Prime Minister yesterday. He was effectively giving a speech to try and undo some of the damage from the budget. When I say damage, effectively, the government are concerned about how the budget has landed and the fact that everyone is running around.
I'll tell you what, I've seen dogs lay turds that have landed better than this, to be honest.
Oh, God. Keir Starmer was saying the UK needs a productivity revolution and that they want to root out excessive costs across the economy and reform the welfare state.
I've got an idea how to root out some costs. Stop spunking money on inefficient welfare.
Well, yeah, quite. And of course, this whole reform the welfare state business, they tried that in the summer and it didn't work. So don't hold your breath on that front, ladies and gents. Keir Starmer also said that he has full confidence in his Chancellor, Rachel Reeves. If any football fans are out there, when a board says they have full confidence in the manager, it's usually a sign that they're out in the next
Here's one for you.
So one to watch.
We're all fearful for Torsten Bell replacing Rachel Reeves. Get Sam Allardyce in there.
Do you know what? He couldn't do a worse job, to be completely honest with you.
I think, we know he's good with he's frugal with his money. Well, to be fair, he loves a brown envelope. Well, allegedly. If Big Sam's watching, big ups to Big Sam.
His pint of wine.
Yeah, exactly. One thing to note, though, obviously, we had, for anyone that has been living under a rock, obviously, Richard Hughes, the OBR chief, resigned spectacularly yesterday. Obviously, a lot has been made of that because he was meant to be reporting to the Treasury Select Committee today. Although, as Helen Thomas, our good friend at Mark Blonde Money, reported, that there are 2 other people from the Treasury that are going to be reporting to the Treasury Select Committee. That is today, isn't it?
It is, yeah. I was just going to get on to that, actually, because as you say, we had that report into the OBR leak, the November economic outlook that was obviously leaked early. Basically, it was human error. They uploaded the file, didn't think people could access it by guessing the web address, and it turns out that they could. It also transpires, interestingly, that apparently the March report was also able to be accessed prematurely. So I was reading that and kicking myself, going, well, why the fuck didn't I try this in March?
It does make me potentially someone found this out, because obviously with Webflow and stuff, you can kind of work out when stuff was published onto the website. It does make me wonder if someone knew about this in March, someone in markets, be that someone at Reuters or whatever, and we're just waiting to see if they did it again.
Yeah, it wouldn't surprise me at all, to be honest with you.
Go on.
I have to say that the other thing is, of course, Richard Hughes has resigned as head of the OBR. They're going to launch a recruitment process to replace him in the coming weeks. What's more interesting than that, though, is a story that we had in the Independent yesterday, which was noting, citing sources within the Treasury. Basically, the long and the short of this story was, if Richard Hughes hadn't had released the forecast breakdown last week on Friday, then he might have been able to get through this whole issue. The fact that he did meant that the Treasury wanted him to quit. So his resignation, ostensibly about this budget probe, but actually is because the Treasury were pissed off with him, frankly.
Well, quite. And as I mentioned yesterday, pardon me, it feels like to me that he's been forced. Well, there's no doubt about it. He has been forced to resign. But he's been forced to resign basically because he couldn't stand the Treasury / Rachel Reeves blaming the OBR for their decisions, which he knew to be bollocks. But Phil, my take on this is he's basically stood up for his institution, the OBR. He stood up for his staff and said, well, hang on a second, you can't blame us for this. We all know you're talking bollocks. And here's the proof. And then that's obviously what's rattled the Treasury Department, Rachel Reeves, which has pretty much forced him out. So unfortunately, as bad as the OBR have been in recent years, but also a lot of that seems to be down to lack of funding, as funny enough, as Helen Thomas also mentioned yesterday when there was a bit of a breakdown about where things have gone wrong. But the wrong person's resigned, in my humble opinion. But I can't wait for him to release his book.
Well, that is going to be an interesting read. Just sticking with the UK, lastly, we had some trade news yesterday, according to the Times, citing people familiar with the matter. The UK and US are close to agreeing a zero tariff deal on pharma products. This could be announced in the coming days.
So that's pharma PH, not pharma as in
drugs and pills, not, cows. This will basically involve the NHS paying more for drugs. The reason why, and it's of note, of course, the likes of GSK, AstraZeneca, etc. The reason why this is needing to be agreed is because, of course, although the UK was the first to get a trade deal with the United States all the way back in April, it was one that didn't include sort of provisions for future tariffs. So, for example, where Trump has been throwing around tariffs on steel and aluminium and pharma, the UK has been paying those tariffs, whereas deals with the likes of the EU and Japan have meant that they have not had to pay these tariffs, which is why the UK is conducting these sort of separate negotiations. But it looks like progress is being made on that front. And also on the trade front, the Wall Street Journal citing sources this morning, noting that rare earth companies in China are reportedly looking to find workarounds to their government's export restrictions as they keep sales flowing to Western buyers. Of course, that issue has died down a little bit in recent weeks, but nonetheless, it is something that we need to continue to keep an eye on. Just a few other bits of corporate news.
Just before you go on that, regarding this farmer Giles trade deal, the more I look into this, the more I think that Labour Party or Keir Starmer are going to come out of this very badly, because obviously there's already a lot on his plate, to say the least. But it's like you said, it's very much in favour of the multinationals, i.e., AstraZeneca and etc. can sell their drugs to the US without paying tariffs, but at the detriment to the NHS, which, as we know, is Labour's love child, because the NHS are going to be paying more. And I'm trying to work out how to game this out, that people don't start really kicking off about it, because it's a very bad light to be in when you're kind of favouring the multinationals over the NHS, especially for the Labour Party. And I kind of, it's one of those kind of nice little litmus tests where, what would happen, or what would be the headlines if it was a Tory government that did the same thing? And I can tell you what, it'd be disastrous.
Well, I was going to say, I can tell you exactly what they would be.
So it'd be interesting to see how this plays out, because this could be something that drags on a little bit, because it's not a great deal for UK citizens, if you see what I mean.
No, it's a terrible deal. It's a case of there is a deal, but we're all paying more for it. But there we go. We'll keep an eye on that. Other bits of corporate news just before we move on. Airbus, they apparently delivered 72 aircraft in November. That is down from the 78 that they delivered in October. So a little bit of a descent there. But nevertheless, they did also confirm yesterday that the vast majority of these A320s have now had the necessary software update to basically fix their flight controls. And two last headlines in the AI space. Nvidia, they are still doing all of these strategic partnerships, this time with a company called Synopsys to revolutionize engineering and design. And as part of this strategic partnership, Nvidia has invested $2 billion in Synopsys at about $415 a share. And last but by no means least from me for the time being, it appears that all is not well at OpenAI. Sam Altman, according to the Wall Street Journal, has declared a code red effort to enhance the quality of ChatGPT. Apparently, he is increasingly worried about Google and their Gemini AI offering, which seems to be not only much more advanced than ChatGPT, but also, I'll dig the chart out from somewhere, but Jeffries had a very good chart doing the rounds the other day, basically showing how usage of ChatGPT was essentially monopolistic 3 years ago. Now it's fallen to maybe 65, 70% of all of these AI models.
Yeah,
sorry, just lastly, the speed at which Google is taking market share is frankly frightening.
So 2 things on this. Anecdotally, I used to, because ChatGPT was the first one that I started using, first mover advantage, that's all I was using until basically a couple of our friends, including Tom Paul's Cars, basically told me I was a mug for using it because it's appalling. And I got to say, since I started using your mate, Claude, or Claudette as I prefer to call her, it's far superior. And again, speaking of some far more intelligent people than myself, obviously this is why I like talking to you, because you're also far more intelligent than me on many things. Everyone said, look, the quiet, this is like a year or so ago, everyone was saying that, people are mugging off Google and saying like they're nowhere in the race. And, their argument was Google are the type of company that won't be releasing updates every time they make a tiny little kind of change. And when they know it's not good enough, they'll be working behind the scenes. And then when they do release, when they do come to market, it will be kind of revolutionary. And it seems to be exactly what's happened. They've stayed in the corner. They've let people like Sam Altman make all these loud noises. And they come out, they release something that's far superior and it gets better quicker. So,
absolutely, that.
Power to them.
Anyway, that was all from me for the time being.
Okay, nice one. Well, let me read out some of the headlines from the overnight news roundup. As always, do subscribe to the Substack to get these sent directly to your inbox as soon as we get them from our good friend Zach. Starting off in macro world, at least 3 Chinese rare earth magnet producers have been granted export licenses that will enable them to accelerate shipments following a trade truce between the US and China. WSJ reports that China rare earth magnet companies are finding workarounds to their government onerous export restrictions, tweaking magnet formulas to avoid using certain restricted rare earth elements. Europe's defense companies are scrambling for rare earth minerals as the US is scooping up supplies, and European rare earth supplies may begin to run dry in the coming months. Anyone know how magnets work? I'm still a bit bamboozled by that. Anyway, moving on. Wall Street Journal's Fed whisperer Timileros article notes interviews for the position of the Fed chair still underway, though Hassett offers what other candidates doesn't, and that's the president's trust and credibility with markets. I can tell you on Polymarket right now, he is trading at about 80% chance of getting the job. I think it's from Michael, disagree with me if you can, but it sounds like it's basically his to lose at this point.
Well, yeah, absolutely. It does seem like that in terms of the reporting that we've had. Certainly, he is the front runner. And I would question, I agree with what Tim Rouse is saying in terms of loyalty and trust. He's been Trump's right-hand man for the last decade or so. I would question the credibility aspect of that.
Yeah.
I think he's going to have a lot of work. Well, I would say 2 things, actually. One is I think he'll have a lot of work to do to distance himself from the administration if he were to get the job. And I think secondly is that Hassett is going to potentially have the same issues that Governor Steve Myron has had, which is that it's all well and good,
whoa.
Pushing for...
Big Steve.
Yeah, your best mate. It's all well and good sort of pushing for lower interest rates, pushing for sizable rate cuts. But the problem that Myron has had is that unless you're making a coherent argument for those significant rate cuts and an argument that holds up to economic scrutiny, then the rest of the committee just aren't going to vote for that, which is why he's been the only one dissenting for these 50 basis point reductions. And I think, depending on where we are in June 26, potentially Fed Chair Hassett's first meeting, that could be a bit of a sticking point to him for him. But we'll see how that pans out.
Absolutely. Well, it makes Fed decisions fun again.
Well, indeed.
Yeah.
It's as I described to Lintz yesterday, it's the BOE-ification of the Fed, where those
God.
individual policymakers have much more sway than the chair just forming a consensus.
Oh, God, don't bring that into my lexicon, please. Followed by Japanese sovereign bonds. They rebounded after Tuesday's 10-year auction drew solid demand, bringing temporary relief following a steep sell-off triggered by the Bank of Japan Governor Ueda unexpectedly hawkish turn. Japan's finance minister Katayama said on Tuesday she sees no gap between government and BOJ on their assessment of the economy after the central bank voiced confidence in the outlook and hinted at a rate hike. What else we got? China, Japan flight cancellations mount. We mentioned this yesterday, the day before, or probably not because that was Sunday. Some 40% of scheduled flights from China to Japan in December have been scrapped, according to Chinese state media, as the fallout for air travel and tourism from a deepening dispute between the two major nations kind of halts business between the two. Speaking of China, China started a power plant using an advanced gas turbine that's been locally manufactured for the first time, paving the way for the country to eventually reduce reliance on imported technology amid a global shortage of the equipment. Moving on to the UK, Bank of England cuts capital requirements. They've cut it to its lowest estimate of how much capital the UK's banking sector needs for the first time in a decade, and signalled a consultation that could free up extra lending and higher payouts to shareholders. Sticking with the UK, Britain's private sector expects output to slide over the next 3 months in the gloomiest outlook since May, as cautious consumer spending and cost pressures continue to weigh on businesses. That's gone to a CBI survey that came out this morning. UK house prices, they rose for a third consecutive month, according to Nationwide, and a sign that the market defied the looming threat of tax hikes ahead of the Labour government's November 26th budget. All eyes on seeing how the housing market fall out from obviously the mansion taxes and whatever, because that seems to be sticking some shockwaves through the markets. What else have we got? Geopolitical news. ECB refuses to backstop Ukrainian loan. The European Central Bank has refused to backstop a 140 billion euro payment to Ukraine, undermining the EU plan to raise repatriations loan backed by frozen Russian asset. I've got no indication if this is related, but obviously has been big news over the last week or so about this huge graft probe involving Zelensky's number one, or number two, whichever way you want to refer to it. But basically, billions have been going missing. And funny enough, we did say, myself and Angie did say on yesterday's Grain Blast, obviously check that out if you can, that this would probably impact EU/ECB's, keenness to just kind of write blank checks. And lo and behold, next day, this has happened. So one to keep an eye on here, because obviously domestically, countries in in Europe domestically, they're struggling for their own balances, cash pots. So when you're sending money to a convicted grafter, I'm not saying that's Zelensky, I'm talking about his number two, it makes conversations more difficult, should we say. What else we got? US envoy Steve Witkoff traveling to Moscow to meet Vladimir Putin, who claimed a key Ukrainian city had fallen to Russia on the eve of the talks about a potential peace plan to end the war. We've got a Russian flagged tanker has been attacked in the Black Sea. That was going between Russia and Georgia, if I recall correctly. It's not mentioned on the headline, but there we go. Equities, you've mentioned about the code red. Coalition seeks to limit OpenAI's power in California. A coalition which is seeking funding from Elon Musk is proposing a California ballot initiative aimed at limiting OpenAI's power. The initiative aims to review the potentially reverse conversions to non-profit organizations engaged in scientific and technology research that occurred since January 2024. So I want to keep an eye on there. What else we got? Netflix sweetens Warner Brothers Discovery bid. Netflix has sweetened its offer for Warner Brothers and Discovery in a second round of bids as it tries to outdo rival Paramount. Costco, that's become the latest and one of the biggest companies to sue the Trump administration over tariffs in an effort to secure full refund should the Supreme Court rule sweeping duties illegal. And finally, from me, Banco Santander reduces Polish stake. Banco Santander is selling part of its stake in Polish subsidiary for $473 million after its decision to divest around half Santander's Polska to Ernst Group earlier this year. And no puns from me today. Back to you in the studio.
Oh, good stuff. Thank you, Ryan. In terms of today then, if I can find my notes, which have disappeared. There we go. We don't have much on the data docket, to be completely honest with you. We do have a couple of... Sorry?
Pub?
Well, yeah. We do have a couple of releases from the Eurozone this morning. At 10 a.m, we get the latest flash inflation data. This is for November. Those headline and core CPI set to have held steady compared to October at 2.1% and 2.4% respectively on an annual basis. Do note that the Eurozone swaps curve discounts just 6 basis points of easing from the ECB over the next 12 months. Consensus is very much that the ECB's easing cycle is done and dusted. And also at 10 a.m. this morning, we get the latest unemployment stats from the Eurozone as well. The unemployment is said to have held steady at 6.3% in October. Besides that, we're due to hear from the ECB's Dolent as well as the Fed's Bowman today. Fed Vice Chair for Supervision Bowman will be speaking solely on her supervisory remit. There will not be any comments on monetary policy, given that we are in the pre-meeting blackout period, just the same as there were no comments on monetary policy from Fed Chair Powell overnight while he was giving a tribute speech at an economics event. Besides that, the only notable corporate report today comes after market close from CrowdStrike. We are pretty much through the entirety of earnings season at this point and scraping the barrel a little bit on that front. But yeah, for the time being, that's all from me.
That's all from me. Listeners, thank you as always. We'll see. I'll check her for Reeves sacked before end of the year. I'll just check her over. 2-1 basically for Rachel Reeves to be sacked by the end of the year. I don't know. Anyway, yeah,
we can hope.
Well, do we? I don't know.
Sorry, we will finish in a second. I was just sent an article saying that apparently a lot of this briefing in the papers against Reeves and Starmer, they reckon it's coming from Ed Miliband and he might be on manoeuvres, which is worried. Well, wait, that gets worse because when he was Labour leader in the run-up to the 2015 election, do you want to know who his director of policy was?
Don't say Torsten Bell.
Who the man who came up with the Ed Stone was?
Oh, God. Oh, go on.
Torsten Bell.
It was Torsten Bell, right?
So Miliband PM, Torsten Bell Chancellor. Long IAG.
Save yourself. Save yourself. Save yourselves. Right, on that right note.
Yeah, sorry.
Thanks for that. Listeners, thanks for having us. We'll see you.